What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis on Sundays, and I also provide daily pulse on the market on X at Hemi137. Yes, I did find the voice memos on X, so we are rocking and rolling on there as well. But before we get started, remember to hit the like button and let's go ahead and roll into our recap of the past week. We have to understand this current economic environment. We've had a lot of big events occur that are kind of setting us up for the next earnings cycle and the next reports. And that's what I really want to dive in to start hammering. You have a span essentially between now and the next on farms, which we are without any major scheduled events that could potentially start causing the market to start pushing up. Yes, the market can start rock and rolling back upwards until we get some major event that could essentially cause that next layer of fear to occur. Now, what I do believe we're going to see this year is a kind of a reflection of 2022, as we had a lot of volatility, we had a lot of ups and downs. This year is kind of playing out that way. We had a heavy pullback and was very much needed. But you have to understand the only meat on essentially the bone that we've had to this point has been the Mag 7. In 2022, everything sold off and sold off pretty bad. But again, you have to understand, when we recovered from that point going into the election, there was only the Mag 7 really that have been doing that and making that push. And you've already seen a lot of these Mag 7s correcting 25, 30, 40, 50%, some of these, because of just the current concerns about tariffs and inflation coming back. But the good thing is we did have inflation report, and it is slightly lower. One thing we did find out too is trueflation also dramatically dropped on that last week's report. It has popped up a little bit this week, as you can see, it's sitting at 1.3. But you have to understand that, again, that's a huge drop. Inflation has essentially been slashed in half, and I think will continue to drop, as we'll see a massive wave of deflation because of the massive cuts and essentially deportation that's going on. So the next several months, expect those numbers to get worse. But being said, knowing what we know with core, knowing what we know with unemployment, unemployment is still healthy from, again, what headline news is saying. This isn't going off of revisions, because revisions, things look horribly, horribly bad. But again, given headline news, things are still strong and inflation is not bad and actually coming down. Being said, monetary policy did not change this past week. We did have Powell come on, though, and he did say that essentially he's looking here in April 1st that he is going to start providing some quantitative easing, whatever that means. That essentially means the printer's probably more likely going to come back on. But again, and essentially rate decision, rate cuts. But you have to understand, there needs to be a reason to cut. The Fed is not just going to cut. So there has to be an event that's going to force the hand of the Fed. And leading up to this point, a lot of referencing from Trump and from Powell is that there will be some sort of event that is going to happen here very, very shortly that's going to force the Fed to have to start cutting rates. Again, it has to be an event. It doesn't matter all the things that you're seeing out there, what the rumors you hear. You need a big event, some massive data set that drops. It's going to be like, wow, we're really in a recession, despite everything you've been told. And even the Secretary Treasury has told you this, is that you've been in a recession for quite a long time. You are, in fact, probably more than likely in a depression at this point. The world is in a depression, and the US is no different. But again, we are, again, trying to essentially band-aiding it and covering it and artificially pushing up everything over the last 2 years. And this is what the concerning part was, is, okay, well, we're going to get the debt ceiling. The debt ceiling came through, so that wasn't a concern anymore. I think there's a lot of things going on behind closed doors that we are unaware of. This is the way it always works. But like by design, the market will continue to go up. So you can't, again, feed too much into, yes, I do believe you should have a narrative of things that are playing out. Yes, I do believe the market will correct or could potentially correct even more. It could be delayed even another year or two. We don't know for certain. But the way things are looking right now, what we need to see, we've already had that major correction, like I've talked about. Now, you got to look back in 2008 when we correct that financial crisis corrected. Even in 2010, people were still talking there was going to be some major correction. This might be our 2010, maybe 2022 was the major correction. It was a pretty big one, about 26 correct. I believe it was about 26, 27% correction in the market. And then maybe from that point, that's was our only correction with all the uncertainty. Again, we went into a decade long run after that fact. Is that what we're seeing? You have to understand we are kind of getting into a hyperinflation environment. But the thing is, with all the wasteful spending that's been cut, now you're going to add some massive deflationary aspect to that, and you could get this quote unquote golden era of a massive bull run over the next couple of years. We're not really certain, but again, if things are heavily discounted, it is more in your favor to be taking positions on heavily discounted stocks at this point, as opposed to waiting for a crash that may never happen or maybe another year before that happens. So again, with the rates being uncut and Powell saying that things aren't, there is no stagflation going on. You have been living in stagflation, probably more so over the last year, year and a half, as opposed to currently right now. I think right now we're kind of working out some of the bugs. But again, you have to anticipate that something major. And again, I'm thinking what it will be an inflation report and an unemployment report that's going to essentially drop and show those true inflation. So if you get massive deflation, then all of a sudden you get a non-farms that shows that things are horribly bad, that we're well above 5%, which I do believe we are. I'm not taking into account the numbers that are being pushed out there. Again, those are so manipulated all the time. But I think you could get that event, and that would be enough to scare the market. When that's going to happen, I would think because of the massive action taken by this current administration, could be blamed on the massive cutting from the Fed, and the massive deportation could lead to major changes in the GDP and also just the market itself, and change that narrative. Ultimately, that's what you're looking for. This golden utopic narrative of everything was fine and dandy this whole time, and uncovering it has not been that way truly this whole time. The massive fraud and corruption that's been going on. But again, they're not just going to pull these things out and then rug pull the whole market. People, this is everybody's livelihood and pensions and everything else that is currently going on. So if they just rug pull it, then you're going to put ourselves in a worse state than we already are, despite a broken system that we currently use. And even though I do heavily believe in crypto to an extent, just a bit of concern what could be coming in the future when it comes to other aspects of crypto, the digital era. But when it comes to quantum computing, even though that's still, I think, many years away, and potentially quantum resistance, networking and stuff like that. But nonetheless, there's a lot going on, and that's not even including the AI and the robotics that are going wild right now. So again, a lot going on, but we're ultimately paying attention to heavily to that of the unemployment report, which will be on the first Friday of the month, the next month, and then you have the core inflation, which is about a month away, and then you get the new earnings cycle that is sitting right there on the 15th of April. And typically, April is a pretty bullish month, so we'll see what happens. A lot of potentially things could play out. So that's kind of really what we're watching there. But I do believe stocks in general might be kind of bottoming. Is it a dead cat bounce? It's going to be hard to tell. But if you just keep waiting, a lot of things, the Mag 7 has already been pretty heavily discounted. So if you haven't been buying at this point, you might not get your buy. And again, I don't know how much more of things can sell off. The Mag 7 are already getting hit pretty heavy. We're going to see another 70-80% of the Mag 7. It's really hard to say. And you have to understand too is the whole economic environment is rapidly changing to an AI and robotics infrastructure. And what exactly does that look like? You're going to see some wild numbers over the next 5 to 10 years on production. And that's what you have to understand is yes, the massive spending we've had, we're dialing that back, and the massive production that's going to be created from AI and from robotics is going to put us in a golden type era. But where does that leave essentially us, the human, and where we go from there, right? So that's what we're trying to figure out. But nonetheless, the Doge has saved roughly around 230 billion from what the Doge clock says, but we'll see how true that is. I think the reflection of that will start rolling out over the next several months when in these reports. That's why I think it's extremely important to be watching those. Trump plans his tariff liberation day with more targeted push. So we have a big day on Tuesday. I believe it's Tuesday that this whole tariff talk and people's all afraid that's going to be some really generic tariffs, and there's so much worries and concerns. But now they're saying it's more nuanced than that, and it's more targeted, which alleviates a lot of stress on a lot of people, and so that could cause the market to pop this week. And like I said, we don't have any major events between now. Yeah, I mean, we're going to have events, but you have to understand, I don't put a lot of weight on these things. I only try to announce ones that actually have weight, and we're going to potentially shift the market in the direction of the market. But again, you have to understand these things when they occur, and again, sometimes they have more weight than others. So Tuesday, I think that will help. If that's the case, that it's more targeted, could again cause some sort of rally in the market because we sold off so heavy already. Something interesting that came out this week is DoorDash essentially now is allowing people to finance their food. Yes, you are in $1.2 trillion in personal debt, some all-time high, and people are now having to finance their food. We talked about this as people essentially were skipping meals because they couldn't afford it, but now they're allowing the accessibility to just finance your food. Why not? Because you can't go even in more debt. So again, more and more issues continue to pile up. You can't continue to live this way. It's becoming more and more unaffordable. That needs to change very, very quickly to be able to do that, to be able to refinance as well our debts. We're going to need a major crash in the market. We're going to need a major event because we're not going to be able to pay these ridiculously high rates on financing new debt. And so now you have DoorDash that's going to help you finance your food. And then gold. Gold has been a big deal. I don't typically talk about gold, but a lot of these major governments, China in particular and stuff, a lot of these have been adding gold ridiculously quickly, especially what's going on with BRICS. All the BRICS nations are rapidly accumulating as much gold as possible. The U.S. has been doing the same thing, but about $5 trillion in market value over the past 12 months. So it's pretty wild what's going on with gold. Again, that's always happens going into a major concern, but once that event explodes, then everything just sells off, even gold. So just keep that in mind. Upcoming weekly events this week, we have GDP, which again, it's not going to have horribly a tons of weight, but it'll be important to watch, especially with the deportation, how vastly GDP falls. Again, we are kind of looking for that catalyst that could potentially push the market. You do have another core PCE on Friday. Again, it doesn't have nowhere near as much weight, in my opinion, as core inflation does, but still something to be aware of. It can provide intraday moves. Again, there could be that one thing if some of these very non-heavily weighted events all of a sudden come wildly out of expectations, yeah, you could scare the market. So that's one thing you have to keep in mind every time these events come up. And again, there's always different kinds of events. I only try to highlight those I believe have any significance that could potentially pivot the market is what I look for. Upcoming pivots is monetary policy. We just had one over the past week, so our next one is not till May. Yes, we got a whole month before the next monetary policy, so we keep that in mind. We did have projections that came out. Again, they went from just one cut this year to 0 cuts this year. But now you were having Powell, that's off the projections, but now you're having Powell saying that there may be more cuts. So we'll see what happens there. Next core is on the 10th. So that's going to be extremely important. If we see massive disinflation, if for some reason we get massive unemployment, the rates are going to have to start getting cut and the printers are going to have to start coming on. And I think we're very, very close to that particular scenario. But again, we'll have to wait and see. Again, we're not going to go over any earnings. There is still earnings going on. We only care about industry leaders. That doesn't really start again until here April of next month. Then we'll put some more weight on that as that rolls out. Now this week we aren't pricing in the end of the world, but we're still kind of thinking about the end of the world at 109. Again, roughly this is about 60. So the fact it's still out in the hundreds is still really high as far as expected moves. So again, I think that's primarily due because of the tariff talk. Just like Tesla is still very high at 19. Tesla, I think, is going to start recovering very, very quickly. Might be a great week to trade Tesla, especially with options, just depending on the momentum after the tariff talk discussion on Tuesday. If it doesn't have any influence over Tesla, Tesla could potentially start really recovering very, very quickly from there. Boeing is about normal, sitting at 7. JP Morgan, a little, again, really high, sitting at 7. It's typically around 4. So the market is anticipating some big moves coming out of this tariff discussion this week. So that is really what's important. And again, if he's targeting specific things, that could cause the market to rally, and we could get a big rally this week. And again, something I talked about, you do typically have big rallies going into an earnings, and we're just a couple weeks away. Typically that rally happens before the actual earnings do, and then when the earnings report, you may have a potential week or two there where the market still might continue to push or might continue to sell off after a lot of the industry leaders are reported. This is again why you have your anchor, that is Nvidia, that's essentially placed about a month out from the beginning of the earnings cycle, because again, it's now owns about 7% of the index. So between Apple and Nvidia, that's 12% of the index, and so they spread those out. So again, they don't report back to back, because if you have two back to back horrible earnings cycles, the market's going to gap down and start potentially causing some major fear in the market. So if you have made it this far, I do appreciate you. Again, some major events to be watching in the next couple of weeks. We don't really have tons going on over the next 2 weeks. Tariffs will be big because of all the uncertainty. But again, once we may get more clarification that the tariffs aren't really causing as much inflation as everybody is concerned about, much like the debt ceiling, there was so much concern and worry about that everything was going to fold in March, and it did not. Again, you have to take advantage of when things sell off, and that's where you need to be, and you need to essentially drown out the noise and make very sound judgment over what's going on, especially when stuff is already corrected 30, 40, 50%. You do need to always take that into consideration. But with all that being said, have a great day, and I'll see you guys on the field.